So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good afternoon, everybody. We have the FOMC vault. No, I don't know. Every time that it seems like everybody is like really looking forward to a certain FOMC meeting and like it's a big deal, it ends up being not a big deal. And I just tell you one thing I'm already noticing is that although I'm sure that it will continue to thin out, we're 5 minutes ahead. There is actually quite a bit more liquidity over there in the 10-year than there usually is. By the time that they get put out, I expect there to be maybe 500 contracts max at any one price. But I have seen times where they get to that or below 1,000 at least, well within like 15 minutes before. But today they're still putting up some 2000s on there, especially on the buy side. And interestingly enough, it's the offer side that is thinning out first. So yeah, it's all very, very interesting. And we'll see. I'm sure that like 1 minute before it'll really thin out. And yeah, I did a video for TikTok with the chickens trying to predict what the change will be. The big thing we're looking at is, do they move their forecasts up to include rate changes by 2023? And the chickens said no. So, I think that I have no clue. I have no clue what they're going to do. I kind of suspect that they're going to refuse to move up their forecasts. Because, like, honestly, if they came out, that rate is going to plummet and it would be very bad for the stock market. But somebody must be betting on that today. Like, this move that we had down in the morning had to have been something along those lines. Somebody hedging themselves against that possibility. The dollar kind of not having gone much of anywhere today. Oil has been hit back and forth quite a bit today, but is about where it started. And the treasuries, when I was trading them, we were up, right? But they sold back hard at the very end. Okay, so there you go. They are really starting to thin out now. The E-mini not thinning out as much as I would think. No, it's the chicken video is on TikTok. You gotta go find me on TikTok. So for a YouTube video, that would be silly. But for a TikTok, just recording something with my phone, it's totally fine. So there we go. That's what I'm expecting to see. Less than 500. Okay. Maybe some of them had unfinished business. Who knows? Now you're going to hear that alarm thing go off quite a bit here when this happens, so don't freak out. Oh, wow. Yeah. Oh, yeah. Look at that go. Look at that go. Done. I can't believe I got away with that. I don't have a link to my TikTok anywhere, but if you go on TikTok and you search for Speculator Seth, you'll find it. I think there could be more to this, but look at the E-mini. Holy shit. No, don't do that. Here, I'm going to flat that. Try that again. Oh my. Oh man. They're going to 4,000. They are going to touch that. Almost certainly, huh? Oh man. Okay, so the treasuries just took off and now they are coming back here. Median dot still sees no hike over forecast horizon through 2023. Okay, which is good. Looks like the dollar is taking a plunge and gold and silver are taking off here. Fed repeats path of economy will depend significantly on course of virus, including progress on vaccination. Repeats to maintain accommodative policy until inflation remains moderately above 2% for some time, so that inflation averages 2% over time and longer. Term inflation expectations remain well anchored at 2%. Fed will continue to increase bond purchases by at least $80 billion per month of treasuries and $40 billion a month of mortgage-backed securities until substantial further progress made on maximum employment and price stability goals. Okay, well, I took like way too much risk on that one in the E-mini, but it's fine. Fed projects inflation at 2.4% in 2021, up from earlier 1.8% estimate. Oh, that'll do it for your gold. If this isn't the thing that finally gets gold and silver going, I don't know what will. Okay. Well, I tell you what, man, this Fed release not disappointing, huh? Man, when it comes in the E-mini, it goes, doesn't it? Did you see that drop on the Dixie? Yeah. Oh, here, let me show you guys. I mean, I don't see the Dixie quite as well as I do other instruments because I calculate it synthetically. So it updates per price change. But look at that thing. It is getting crushed. I'm sure that they will go below the March 12th low easily. I mean, this thing is just going to get destroyed. And again, on silver is having a pretty good run up there too. And of course, it pulled back like everything else did, but not much. So silver and gold seem to be benefiting from this big ton. I think I'm going to have to check on some things. check on some stocks. Oh. There she's going. Was there news already? Oh, are you kidding me, dude? Listen, if you didn't know that there was FOMC today, you got some work to do, buddy. Because this was the most important thing you could possibly look at here in the market today. The only thing that really matters for the whole effing week was their news. Oh my gosh. That better have been a troll, man. I'm not trying to make you feel bad if it wasn't, but oh geez. Here comes a new high. And this is just like the overnight high too. Oh no, wait. Overnight high is at 39.60 still. So we get just a few little bit more steps. That was the RTH high. Just don't short the SPY or E-mini. Yeah, right. Well, so how is AG up one spot 3.6? That's 17, huh? I forget. What is my yes, that's right. Muy interesante. Well, I think that the move in gold and silver is probably just getting started. So, oh, now look at Tesla. Tesla, just on a tear here, going up to 700 again, huh? Is there anything down? Well, the VIX is down. Palantir still down 1%, and Apple's down 1%. Okay. Oh, and GameStop is up again today. That's funny. They've actually been holding it okay. Oh, and did Bitcoin move on it? Bitcoin moved up on it too. Sure. More accommodative Fed, good for Bitcoin, I'd say. So they did run into a little bit of profit taking there in the 39.59 area. Oh yes, and did the curve change? Oh yeah, man. Oh, whew. Yeah, that the 10 and 30 spread really steepened considerably. The 2 and 10 not so much, but So we're getting those little liquidity traps below us on both of these, but they still seem to be pushing up. There was some profit taking there though when they busted the extended session high. Zero Hedge says even Leishman can't believe it. Oh man. Well, the chickens did say, two of them said no, they wouldn't update their forecasts. They were right. I'm just saying. I'm just saying, guys. And you know, the chicken that said no, it was Christine, and we all know she didn't know what she's talking about anyways. Oh, go get it, go get it, go get it, go get it. Come on. Oh, please. And don't just nibble at it. Come on. Plow through that 29. Thank you. That is two $500 trades. Well, with multiple contracts. With multiple contracts, mind you. But two $500 trades in one day. I have never done that. Before, my best trades were $500 trades. So to have it twice in one day, today is truly an epic and historic day. Okay, well, they're going to come back here a little bit, I guess. Oh man, they came back so fast, actually. Maybe they do not like how much the dollar is falling here. Maybe the dollar falls too much, it starts to become a problem. I don't know. What do you think? That is a little excessive. No, well, they were some, of course. Yeah. You know what? I would be willing to trade this on live, but maybe only one contract. Like if this was live, I would have taken that first one on the treasury and would have been done. Because you know that a little bit after that, then it starts to get wild, right? Okay. Buyer's trying to dig it out there. Streaming alerts are available. What does that mean? That must have been from Rhythmic. I like the 2:30 p.m. post wrap up better. Well, I tell you what. That's always the issue, is you want them to You get like a big move up off of the initial news, and then Powell comes in and says something. News Squawk just says too long didn't read and has a picture of Powell with the money printer. That drop in the dollar. Hold on. Okay. 91.46. It seems like Mondo, oh my gosh, how is that possible, that big of a drop? But it's not actually, it's actually still within range, let's say. Still within range. Man, so they were coming up there, they were doing really good, and then it pumped back really hard. Well, how was your day, Seth? NQ was a bitch to me today. Should have known better being... Yeah, you know what? I had a really hard time this morning. I did really good on the treasuries, but I kind of just bailed myself out on the treasuries trading on Sim. So, but here off of the announcement, I took on... ignore what I'm doing in the E-mini. This is not realistic at all. But I as soon as I saw the move, I clicked buy, market buy in the treasury, and it just went right up to 500. And I was like, nice. This is the easiest. I sit there and I look at this and I'm like, and people say you shouldn't trade news. What are you talking about, guys? Like, here is the easiest fucking trade in the world, man. The result of the announcement is blatantly obvious, and it is impossible for the market to completely price it in all at once. They can't do it. It's free money practically. You just have to be willing. You just have to be able to put the risk on, and that's it, because you know that it's going to go up. So yeah, I'm happy. Obviously, I'm a little euphoric right now. They waited for me. Well, if you understand how to trade news, it could be very lucrative. Certainly people who say that think it's gambling. Well, you don't want to get in before the news, obviously. You want to know what the news is first and then trade off of that. Or at least wait for the market to know what the news is. This is kind of what I did. It was funny because when I was sitting there, I was like, okay, well, this would be really volatile. Don't necessarily take the trade as soon as you see the move to, wait. But then I saw it go up and I was immediately like, well, okay, you buy that one. There was a coiling buy divergence too before the news and the indexes. Yeah, well, and even the treasuries were buying ahead of the move a little bit. Yeah. You might be onto something there, EVH. I don't know. Man, it was just such a massive move. How big was that? That was from 30 to 60. So 30 points. 30 points, just boom. Okay, well, the treasury coming back down quickly again. It looks like they're digging in there again in the equities. Interesting that they beat the overnight high, but they're not continuing further up. I guess we're going to get the meeting here in a little bit, and we will watch that. And we are getting hard profit taking in the E-mini. In fact, look at the market is almost all sells. And the dollar continues its plunge, and silver almost up to 26.35. There it goes. As a reminder, Powell won't be here after 2022. His term expires in when... Oh. What are you saying here, Zero Hedge? I know what he's saying. I think it's dumb, but... YouTube.com/Federal Reserve. There we go. We got this. Oh, I got to make sure that I've got the sound off here. Hi guys, so maybe a little bit of buying coming in here. By the way, they haven't stopped at all the shorts either. I really think this has the potential to make it to 4,000 today. No joke. When is Powell gone? His term expires in 2022. Okay, well, here comes the meeting here. It's going to start. We'll see. It looks like that. I'm sure that a lot of this selling is still profit taking. Thoughts on Powell overall? I have mixed feelings on that. I can't stand the central banks, all of them. Are we? No. If you've got something that requires strength in the U.S. dollar, I feel bad for you, son. I got 99 problems, but the dollar ain't one. Right now, at least. So bad. Yeah, that's profit taking. Yeah, it's profit taking. Nasty, nasty. Uh-oh, somebody's clipping.
Looking back, it was clear that addressing a fast-moving global pandemic would be plainly and primarily the realm of healthcare providers and experts. And we are grateful to them and to all the essential workers for their service and sacrifice. The danger to the U.S. economy was also clear. Congress provided by far the fastest and largest response to any post-war economic downturn, offering fiscal support for households, businesses, healthcare providers, and state and local governments. Here at the Federal Reserve, we rapidly deployed our full range of tools to provide relief and stability, to ensure that the recovery will be as strong as possible, and to limit lasting damage to the economy. We are strongly committed to achieving the monetary policy goals that Congress has given us: maximum employment and price stability. The economic fallout has been real and widespread. But with the benefit of perspective, we can say that some of the very worst economic outcomes have been avoided by swift and forceful action from Congress, from across government, and in cities and towns across the country. More people held on to their jobs, more businesses kept their doors open.
You want the equities to puke here? Sorry.
Swift and forceful policy actions. And while we welcome these positive developments, no one should be complacent. At the Fed, we will continue to provide the economy the support that it needs for as long as it takes. Today, the FOMC kept interest rates near zero and maintained our sizable asset purchases. These measures, along with our strong guidance on interest rates and on our balance sheet, will ensure that monetary policy will continue to deliver powerful support to the economy until the recovery is complete. The path of the economy continues to depend significantly on the course of the virus and the measures undertaken to control its spread. Since January, the number of new cases, hospitalizations, and deaths has fallen, and ongoing vaccinations offer hope for a return to more normal conditions later this year. In the meantime, continued observance of social distancing measures and wearing masks will help us reach that goal as soon as possible. The economic recovery remains uneven and far from complete, and the path ahead remains uncertain. Following the moderation in the pace of the recovery that began toward the end of last year, indicators of economic activity and employment have turned up recently, although the sectors of the economy most adversely affected by the resurgence of the virus and by greater social distancing remain weak. Household spending on goods has risen notably so far this year. In contrast, household spending on services remains low, especially in services that typically require people to gather closely, including travel and hospitality. The housing sector has more than fully recovered from the downturn, while business investment and manufacturing production have also picked up. The overall recovery in economic activity since last spring is due, importantly, to unprecedented fiscal and monetary policy actions, which have provided essential support to households, businesses, and communities. The recovery has progressed more quickly than generally expected, and forecasts from FOMC participants for economic growth this year have been revised up notably since our December summary of economic projections. In commenting on the stronger outlook, participants noted progress on vaccinations as well as recent fiscal policy. As with overall economic activity, conditions in the labor market have turned up recently. Employment rose by...
Do you think he's got room to crash this?
As the leisure and hospitality...
I don't know, man.
2/3 of the jobs that were lost in December.
I think it's funny you guys are looking for it to puke.
Nonetheless, employment in this sector...
I just don't see it happening.
...level at the onset of the pandemic. For the economy as a whole, employment is...
I would agree with you. It wouldn't be outside of the realm of possibilities for sure, but I think it's still extremely unlikely.
This figure understates the shortfall in employment, particularly as participation in the labor market remains notably below pre-pandemic levels. Looking ahead, FOMC participants project the unemployment rate to continue to decline. The median projection is 4.5% at the end of this year and moves down to 3.5% by the end of 2023. The economic downturn has not fallen equally on all Americans, and those least able to shoulder the burden have been the hardest hit. In particular, the high level of joblessness has been especially severe.
So there's a little bit of a break higher, some stops there, and yes, almost certainly.
The economic dislocation has upended many lives and created great uncertainty about the future. Overall inflation remains below our 2% longer-run objective. Over the next few months, 12-month measures of inflation will move up as the very low readings from March and April of last year fall out of the calculation. Beyond these base effects, we could also see upward pressure on prices if spending rebounds quickly as the economy continues to reopen, particularly if supply bottlenecks limit how quickly production can respond in the near term. However, these one-time increases in prices are likely to have only transient effects on inflation.
This is the same thing he's been saying, right? We'll see inflation, but it will be transient.
2% next year before moving back up by the end of 2023.
That means that the inflation will be homeless.
Employment and stable prices for the American people.
That's what that transient means, right?
Abilities to promote the stability of the financial system. As we say in our statement on longer-run goals and monetary policy strategy, we view maximum employment as a broad-based and inclusive goal. Our ability to achieve maximum employment in the years ahead depends importantly on having longer-term inflation expectations well anchored at 2%. As the committee reiterated in today's policy statement, with inflation running persistently below 2%, we will aim to achieve inflation moderately above 2% for some time, so that inflation averages 2% over time and longer-term inflation expectations remain well anchored at 2%. We expect to maintain an accommodative stance of monetary policy until these employment and inflation outcomes are achieved. With regard to interest rates, we continue to expect it will be appropriate to maintain the current 0 to 1/4% target range for the federal funds rate until labor market conditions have reached levels consistent with the committee's assessment of maximum employment, and inflation has risen to 2% and is on track to moderately exceed 2% for some time. I would note that a transitory rise in inflation above 2%, as seems likely to occur this year, would not meet this standard. In addition, we will continue...
Oh, there you go. Transitory inflation won't meet the standard.
And of agency mortgage-backed securities by at least $40 billion per month.
See, that you understand now why the inflation will be homeless?
Price stability goals.
Yes.
Our balance sheet since March has materially eased.
Now I'm thinking through how I can turn that into a TikTok, but I don't know. Okay.
The economy is a long way from our employment and inflation goals, and it is likely to take some time for substantial further progress to be achieved. Our forward guidance for the federal funds rate, along with our balance sheet guidance, will ensure that the stance of monetary policy remains highly accommodative as the recovery progresses. Our guidance is outcome-based and ties the path of the federal funds rate and the balance sheet to progress toward reaching
we could pretend to be all offended about it, right? I really think that Chairman Powell should be a little bit more sensitive to the needs of homeless inflation.
To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We are committed to using our full range of tools to support the economy and to help assure that the recovery from this difficult period will be as robust as possible. Thank you. I look forward to your questions.
Oh boy, here comes the questions.
Howard from Reuters.
Hi, Chair Powell, and thanks for that. So could you talk us through how the forecasts for 2021 map into the substantial further progress definition, 2.4%?
No, his setup has gotten a little bit better. A little bit better.
Some progress there, 4.5% unemployment. Is it time to start talking about tapering yet?
Not yet. As you pointed out, we've said that we would continue asset purchases at this pace until we see substantial further progress. And that's actual progress, not forecast progress. So, and that's a difference from our past approach. So, and what we mean by that is pretty straightforward. It is we'll want to see that that the labor markets have moved, labor market conditions have moved,
Oh, it's so high. It's close, but they don't want to go for it quite yet, it seems.
substantial progress toward the 2% goal. That's where we're going to
See a little bit of profit taking there.
includes an element of judgment. And when we see, we'll be carefully looking ahead. We also understand that we will want to provide as much advance notice of any potential taper as possible. So when we see that we're on track, when we see actual data coming in that suggests that we're on track to perhaps achieve substantial further progress, then we'll say so. And we'll say so well in advance of any decision to actually taper.
If I could follow up.
Cool.
Shifting the dots, why wouldn't that suggest a weakening of the commitment here? An awful lot of people shifted into 2022, it seems.
I don't see that at all. We have a range of perspectives on the we welcome that, and we debate things, we discuss things, and we always come together.
Four people moved into 2022, right? And it was expected that there would be five, I think. I have to go back and read that.
During this forecast period, and
oh yeah,
as data improves very significantly since the December meeting, you would expect forecasts to move up. It's probably not a surprise that some people would bring in their estimate of the appropriate time for liftoff. Nonetheless, the bulk of the committee,
the big old fatty order there at 39.61. But I'm going to take some off because of that.
And again,
gap.
Is wanting to see actual data rather than just a forecast at this point. We do expect that we'll begin to make faster progress on both spending and inflation as the year goes on because of the progress with the vaccine.
So now I just hold the rest of this until the close. So if you guys can get the S&P 500 to crash, I will, or if Mr. Powell can do it, I will be so impressed.
Hi.
But I'll make the deal with that. I will eat it. I will hold it until the close.
There's been a lot.
It's a sim order, but still, it's still fun.
Happy to hear an update if you have one, but just sort of more broadly, do you think long term that the leverage ratio poses problems for implementing monetary policy at a time when the reserve supply is going to remain large? And if so, do you think that changes to the leverage ratio, including the SLR, are the way to deal with that problem?
Victoria, we'll have something to announce on that in coming days, and I'm not going to expound upon your questions. Why don't you ask another question if you'd like to, because that one I'm just going to say that we're something in coming days.
Sure. Okay. Well, then I'll ask about unemployment. There's
that dollar not stopping here, man. Whew.
6 rate, but you've also been, really emphasizing the fact that that's not the only thing that you all are looking at. You're also looking at labor force participation and things like that. So, are you all looking at ways of maybe adding to how you're projecting the unemployment rate to the summary of economic projections?
Well, let me say, as we say in our statement on longer run goals and monetary policies.
Ooh, there she goes. Yeah.
On labor market, we never only looked at the unemployment rate, which is the only indicator of labor market outcomes that's in the SEP. We look at a very broad range. You hear us talk all the time about participation, about employment to population, which is the combination of the two, about different measures of unemployment. So it's wages, it's the job.
Look at her go.
Those things they go into an assessment disparities of various groups. All that goes into an assessment of maximum employment. The trying to incorporate all of that into the summary of economic projections would not be practical. Obviously the thing that we do include is just the unemployment rate, and that's a very insufficient statistic. So it doesn't include a lot of other things that we do look at. And I wouldn't want to say that we're looking to include the other dozen things that we look at into the SEP, but from time to time we do look at adding different things. But I would just say the SEP it's a summary. It's one device. It's not going to include all of the things that we look at. I think you know the things that we look at. We talk about them all the time. So we're not actually looking actively at significantly broadening those indicators in the SEP right now.
Well, we're coming up into some
Thank you.
pivots.
Gaber, Associated Press.
Well, we got all of yesterday's nonsense. So yesterday's high was 70 and a half. So just a little bit short of that.
In 2023, you have inflation, or the Fed overall is in the SEP forecasting inflation.
Yeah, yen is flying. Well, I mean, everything's flying, man. Yen, British pound, Swiss franc, actually not quite as excessive as the other ones. Still get going. Actually, maybe it is.
Insufficient, or what is?
And the euro, everything is rising against the dollar, man.
You're meeting the Fed's dual mandate by 2023. Yet again, no rate.
The dollar is getting trashed.
So I guess the first thing to say is that the SEP is not a committee forecast. It's not something we sit around and debate and discuss and approve and say this represents our reaction function as a committee. It's a compilation of projections from different people, and but since we don't debate it or discuss it, it would be hard for me to say exactly why each participant did what they were going to do. So all I would say about this is that we've laid out what I think is very clear guidance on liftoff. And it's really three things: labor market conditions that are consistent with our estimates of maximum employment. And as I mentioned, we consider a wide range of indicators in assessing labor market conditions, not just the unemployment rate. Inflation that has reached 2% and not just on a transitory basis. And inflation that's on track to run moderately above 2% for some time. The first two of those three are very much data-based. The third does have a little bit of an element of expectations in it. So we are very much determined to implement this guidance in a robust way. It is the guidance that we chose carefully to implement our new framework. And to meet those standards, we'll need to see data, as I mentioned. So what does this SEP really say? It says that we're committed to our framework and to the guidance we've provided.
No. What does this SEC really say? The same thing we've been saying for the last 6 months.
Before considering a change in our policy rate. And the last thing I'll say is this. The state of the economy in 2 or 3 years is highly uncertain, and I wouldn't want to focus too much on the exact timing of a potential rate increase far into the future.
Hold up.
That's how I would think about the SEC.
You're saying the dot plot doesn't matter?
Thank you.
He thinks we care about the dot plot too much. That's what he thinks.
Chairman Powell, my question is twofold. One, how high are you comfortable letting inflation rise? There is some ambiguity in your new target, as you mentioned, expectations driven. And do you think that ambiguity might cause markets to price in a lower tolerance for inflation than the Fed actually has, thereby causing financial conditions to tighten prematurely? Is that a concern? Thanks.
So we've said we'd like to see inflation run moderately above 2% for some time. And we've resisted, basically, generally, the temptation to try to quantify that. Part of that just is talking about inflation is one thing. Actually having inflation run above 2% is the real thing. So over the years, we've talked about 2% inflation as a goal, but we haven't achieved it. So I would say we'd like to, perform. That's what we'd really like to do, is to get inflation moderately above 2%.
They're having trouble performing, folks.
About what that means, because I think it's hard to do that.
But he's not going to be too specific about what that means.
2%, we can do that.
There's no hidden messages there.
Look, I would say this. The fundamental change in our framework is that we're not going to act preemptively based on forecasts for the most part. And we're going to wait to see actual data. And I think it will take people time to adjust to that. and to adjust to that new practice. And the only way we can really build the credibility of that is by doing it. So that's how I would think about that.
Thank you. Matthew Bosler.
Hi, Chair Powell. This is Matthew Bosler with Bloomberg News. So there's a widespread presumption at this point that the U.S. will reach herd immunity sometime this year. And all along, you've said that the path of the economy is going to be determined by the course of the virus. I'm curious, based on the projections that you released today that show unemployment will still be above estimates of maximum employment through the end of next year and perhaps sometime into 2023, do you think policymakers need to be doing more here to sort of align the herd immunity and full employment timelines, if you will? Thank you.
So on herd immunity, I'm really going to leave that question to the experts. We don't control that. We're not responsible for defining it. Powell
has a good way of answering the question by not answering the question.
I mean, we're focused.
I mean, this is not his forte, but he's gotten better at not answering the question. Yes.
Very clear guidance. And in the case of asset purchases, it's at their current level until we make substantial further progress. There is an element of judgment in that, and we'll supply clear communication well in advance of actually tapering. And we just went through the criteria for raising interest rates. They're very specific, and we're very much committed to having them fulfilled robustly. I would agree with you that the path of the virus continues to be very important. We have these new strains which can be quite and we're not actually done yet. And we're clearly on a good path with cases coming down, as I mentioned, but we're not done. And I'd hate to see us take our eye off the ball before we actually finish the job. So that's how I would look at that.
If I could just briefly follow up, how do you see sort of the disconnect in terms of an economy that is expected to be widely reopened this year, but full employment taking longer to achieve? Is it the case that factors related to the virus will still be with us over the coming years? Is that how to interpret the forecasts?
I think there's some of that. Sure, there'll be some of that. There's still
Well, I think that the kid did an okay job asking questions.
into spaces that involve close contact. We'll do that right away. Others will hold back, and so I think there'll be some of that. In addition, though, remember there are 10 million people in the range of 10 million people who need to get back to work, and it's going to take some time for that to happen. It can happen maybe more quickly than it has in the past because it involves the reopening of a sector of the economy as opposed to stimulating aggregate demand and waiting for that to produce job demand for work. This could be a different sort of a process, and it could be quicker. We don't know that. But it's just a lot of people who need to get back to work, and it's not going to happen overnight. It's going to take some time, no matter how well the economy performs. Unemployment will take quite a time to go down, and so will participation. So that's all I can say. I think the faster the better. We'd love to see it come sooner rather than later. We'd welcome nothing more than that. But realistically, given the numbers, it's going to take some time.
Thank you. Steve Leisman.
Mr. Chairman, thank you. I wonder if you could, kind of a three-parter here, but all related. Would you comment on the current level of...
Kind of got a little rejected there.
You think they would have a negative effect on the economy? And if not, is there a level that would give you concern? And finally, the third part, other central bankers have expressed concern about what's happened to yields in their countries, and even some taken action, but not you. Could you give us your general idea or orientation towards the idea of coming into the market and affecting a particular tenor of the bond market? Do you like that idea? Do you not like it? Is it at the top of your toolbox, or is it something that you think is at the bottom of the toolbox?
Sure. So we monitor a broad range of financial conditions, and we're always attentive to market developments, of course. We're still a long way from our goals, and it's important that financial conditions do remain accommodative to support the achievement of those goals. And if you look at various indexes of financial conditions, what you'll see is that they generally do show financial conditions overall to be highly accommodative, and that is appropriate. So that's how we look at it. I would add, as I've said, I would be concerned by disorderly conditions in markets or by a persistent tightening of financial conditions that threaten the achievement of our goals. We think the stance of monetary policy remains appropriate. Our guidance on the federal funds rate and on asset purchases is providing strong support for the economy, and we're committed to maintaining that patiently accommodative stance until the job is well and truly done.
Could you give us an idea of how you sort of feel about that tool of being able to come into a particular part of the market and either operating, doing a twist or something like that? Is that something you feel to be the top of your toolbox, or something that you don't really prefer?
You know, the tools we have are the tools we have. What I'm telling you is that the stance of monetary policy we have today, we believe is appropriate. We think that our asset purchases in their current form, which is to say, you know, across the curve, 80 billion in treasuries, 40 billion in mortgage-backed securities on net, we think that that's...
Well, they keep getting rejected from that eye.
And in a number of different dimensions.
I think when it goes, that it'll go, but
for now, we think that our policy stance on that is appropriate.
for now, you see quite a bit of drama when they come back from it.
Thank you. Rachel Siegel.
Hi, Chair Powell. Thanks very much for taking my question. You've spoken about the pandemic's disproportionate toll on Black Americans, Hispanic Americans, Asian Americans, and other groups in the labor market. And I'm curious if you can speak to specific indicators that the Fed will be using to measure job gains for groups that have persistently higher rates of unemployment compared to white Americans. And relatedly, since you've described vaccines as key to the economic recovery, is the Fed concerned about lower vaccination rates in communities of color, and what barriers do you think exist there? Thanks very much.
So which measures? So we do monitor and communicate very regularly about different labor market, disparities in the labor market, let's say. So the African American unemployment rate is substantially elevated, and so is the Hispanic unemployment rate. So we look at those and we see those as, you know, it's slack in the labor market. It's sad to see because those
Quite a few young people as journalists. Well, what happens is nobody wants to do this meeting, and so they will always send the interns.
quite low. What happens in a downturn, though, is
So there's always a new person at these press conferences.
unemployment. So
They send the rookies, yep.
our tools, of course, affect unemployment generally, but we're going to look.
And I would say that usually they do a good job, yeah.
You know, that there's progress there.
You usually do better than those retards at like the Washington Post and whatnot that always ask dumb questions. Is it the Washington? I forget which newspaper. There's somebody that always tries to ask a political question, and he always is like, "Come on, this is the serious economy stuff.
In many cases,
Don't waste our time."
assets, they're not tremendously well paid. They might have other jobs and things like that. So this was a direct hit on that part of the economy, and it's the slowest part of the economy to recover. So, you know, we like to see those people continue.
It was interesting because usually it's a young girl they send. So this time it was a guy with you know, kind of a millennial-looking guy. Not a millennial-looking. No, he had his hair parted in the middle, and it was fairly long. That's a Gen Z haircut. There you go. It was a kind of a Gen Z looking guy.
Yeah, but that's not for us. That's for fiscal.
I would love to be able to ask a question. My first one would be: is GameStop going to the moon? And what is your opinion on garlic coin?
Chair Powell, thanks for taking our questions. If you could talk.
No, you know the Gen Z believes that hair looks better if it's parted in the middle. So that's the Gen Z haircut is parted down the middle, which I think you always look more sophisticated if it's on the side. But whatever.
Whether you see that sort of working in reverse, you know.
You see this? You see this girl right here?
That improve our chances.
By the way, good setup. Camera's face level. That's good.
Fiscal policy.
Oh, she's gone.
She's
gone.
To avoid much of the scarring that we were very, very concerned about at the beginning. And I think that's just the size and the speed with which Congress has delivered.
Gen Z about to go all in on Doge. Now Doge is done, Jay.
Is going
Doge, you already, that was the pump. If you missed the exit, sorry. Garlic coin though, man. Garlic coin, it moved up. It's holding a good base. I think we get another burst of energy going. Things could really pick up momentum. I'm very bullish on the garlic. I own garlic coin, just so you know.
Will look good over the years. Longer term, to really
look at that.
The first part of it is
that going to be a new high. Come on.
I think we've not avoided all of the scarring, but
there you go.
The worst cases there, and
yeah.
I hope we keep at it, and we will keep at it with our policies, of course, to do whatever we can to make sure that continues.
Oh yes, I mined garlic for like 2 years, so think about how much garlic you can mine after 2 years with a 1060. Yeah, I'm a garlic coin whale. Not actually, I'm probably not a whale anymore. I used to be on the garlic coin rich list, but not anymore. Not anymore. Some people have bought more.
That hasn't been the principal focus.
Which makes me think like, oh, do I need to buy more? Am I going to be only 100,000-aire instead of a millionaire when garlic coin takes off because I didn't buy enough?
Beginning to, support people as the
should have kept mining it.
There should be a focus on a longer term focus. I think would be healthy on the investment front.
The funny thing is that I knew about Bitcoin from day one. And I even said, well, maybe I'll go and mine, but I never got around to it. And I was just really opposed from the beginning because I knew it was going to be a bubble machine. I mean, it's behaved exactly the way that I expected.
The slower vaccination.
And I always said, well, probably you could make money from it, but
how worried are you about
how do you get out,
economic divergence?
So, would have, could have, should have.
That trouble in the euro
could have mined a couple 100,000 Bitcoin early on.
In the aftermath of the financial crisis.
You're right. The pace of the recovery is we're having diverging recoveries here, as we did after.
But I'm not missing the garlic coin train.
The other one, the U.S. is.
How are they doing? By the way, we should go look.
And, we conduct policy, of course, here.
Well, that was a good touch of a new high, but it didn't extend much beyond that.
Objectives are domestic ones. It's maximum employment or price stability here in the United States. We monitor developments abroad, and we know that because we know that those can affect our outcome.
Bitcoin did move up, but it's
U.S. demand,
not huge still.
Very strong U.S. Demand, if as the economy improves, is going to support global economy.
Let's see here, the Dogecoin is 5 cents, really.
That'll be through imports and
Garlic coin is 22 cents.
Tends to support
2.4 cents.
I don't worry.
When is there going to be the flipping? When Garlic coin is worth more than the Doge coin? I'm waiting for it.
Rollout going more smoothly.
Wait, let's open up a chart of both of these.
But I don't worry too much about us in the near term because we're on a very good track. Very strong fiscal support coming. Now vaccination going quickly, and cases.
Do you see that, my friends?
A good place.
Look at that.
But the data
new high. It's gonna take off.
Remain strong for some time here.
Can we correct? Oh yeah. Well, that right there, I think just did it. Pushed yesterday's high.
Hi, thanks so much for taking our questions. I wanted to ask if the Fed is planning on extending the same restrictions on bank dividends and share repurchases that are currently in place into the second quarter, and if you're
do we not get to see her face?
Analysis and
okay, you see this? You see that? Gen Z. That's Gen Z right there. Part down the middle.
Like that again.
So we haven't made a decision on that. We're a couple weeks away from announcing that decision. I won't foreshadow it here today. I will say
Dogecoin.
We're going to continue our data-driven approach.
Okay, they're holding their highs pretty okay. They're actually quite going along with it, just like Garlic Coin is.
And their level of reserve.
So I guess it would, It'd be ridiculous for me to say that Garlic Coin is going to go higher and Dogecoin isn't, but we can come in and we can say, here's a head and shoulders pattern, and so Dogecoin is going to go back down.
Results before the end of June, and that layers very significant additions.
Here's your cryptocurrency technical analysis for you.
Over the past year, with the unemployment rate going to 11%,
yes,
and stock prices falling more than 50%. So. But all of that,
there you go. Winston's won a circulating supply of 62 million Garlic Coins and a max supply of 69 million Garlic Coins.
Thank you.
The top exchanges for trading in Garlic Coin are currently Crex24 and Fry Exchange. Those are the only two exchanges you can get it, actually.
You laid out the standards to lift off. And back in June of 2020, you said, you're not even thinking about raising rates. But I see 7 members seeing liftoff in 2023 and 4 next year. How much debate?
Edward, you've been watching this stream. You've been taking tips. Good setup. Good job, man. Look at that. Had lighting on him. He had good color. Everything was great.
We said we want to see labor market conditions that are consistent with our estimates of maximum employment.
I was having dinner with the family. What did the market like so much about this? I think that the market liked so much that it was exactly what it was supposed to be, and that the Federal Reserve is still committed to we're never going to raise rates.
Everybody on the committee agrees to that, right? So it comes down to...
We'll see how long this push up in treasuries lasts, right? So I think that you see like this week let's just say this week they continue moving up, but then maybe the downturn continues. Does the market try and push the Fed? That's
people on the
kind of what I'm thinking now.
Uncertainty about the forecast is very high compared to the normal level. We haven't come out of a pandemic before. We haven't had this kind of fiscal support before, totaling it all up. So you're going to have different perspectives from committee participants about how fast growth will be, how fast the labor market will heal, how fast inflation will move up, and those things are going to dictate where people write down an estimate of liftoff. Of course, this isn't a decision to lift off now. We make that decision then, but it's an estimate based on assumptions about growth, and it's meant to be a tool to generally show the public how our objective function works, how we think about the future. It isn't meant to actually pin down a time when we might or might not lift off. We're not going to make that decision for some time. The chances are that the economy in that time and place will be very different from the one we think it'll be. So I sometimes with the dots, I have to be sure to point out that they're not a committee forecast. You know this, but they're not a committee.
The dots are not a committee forecast, guys.
Projections, really, of individual people. We think it serves a useful purpose. It's not meant to actually be a promise or even a prediction of when the committee will act. That will be very much dependent on economic outcomes, which are highly uncertain.
Mm-hmm.
Thank you. We'll go to Brian Chung.
Hi, Chairman Powell. Wanted to elaborate a little bit on your commentary about the fiscal stimulus. So it sounds like you, I guess, see the case for even maybe...
So this guy looks like he might be Gen Z, but he has the side part. But he's Asian, so it might be different. The rules might be different. I don't know.
Right now, do you still, I guess, maybe see the country in a place right now where it wouldn't be a concern if there were to be more spending at this time?
No, so Brian, it's not up to
He's a good-looking guy.
what Congress should spend money.
I don't swing that way or anything, but he seems to me like a good-looking guy. Maybe I'm just jealous of his hair. I'm jealous. I think that's what it is. I'm jealous of his hair.
Of the economy. And I think what's happened so far has done a pretty good job of that. But really, I wanted to make the longer run point that if to work on the productivity over longer periods, that comes down to a number of things. But one of those things is investment in people, in their skills, education, aptitude, all of those things. I'm not in any way suggesting that that's something Congress should work on right now, or that that's just not that's not our job. I'm just saying that is what fiscal policy can do. I
understand Seth Powell makes me weak as well, and after he starts talking about money printing, it's all over.
Raise potential growth. Those things.
No, I was talking. Never mind. Never mind. Never mind.
All on the current fiscal setting.
I'll be honest, I kind of miss Janet a little bit, but she's the Treasury Secretary, so
question. I just want
it's fine.
An updated view on your sense of your view on financial stability risks and whether or not you see any pockets of excess out in financial markets that concern you.
Michael Brown says may as well scrap the dot plot, to be honest. And Newsquack says, but then we'll have one less thing to obsess about ahead of the key Fed meetings.
So, financial stability for us is a framework. It's not one thing. It's not a particular market or a particular asset or anything like that. It's a framework that we have. We report on it semi-annually. The board gets a report on it quarterly. And we monitor every day, and it has 4 pillars, and those are 4 key vulnerabilities: asset valuations, debt owed by businesses and households, funding risk, and leverage among financial institutions. Those 4 things, and I'll just quickly touch on them. So if you look at asset valuations, you can say that by some
By the way, that gold and silver is still going.
Elevated compared to history. I think that's clear. In terms of households and businesses, households entered the crisis in very good shape by historical standards. Leverage in the household sector had been just kind of gradually moving down and down and down since the financial crisis. Now there was some negative effects on that. People lost their jobs and that sort of thing, but they've also gotten a lot of support now. So the damage hasn't been as bad as we thought. Businesses, by the same token, had a high debt load coming in. And many saw their revenues decline, but they've done so much financing, and there's a lot of cash on their balance sheets. So nothing in those 2 sectors really jumps out as really troubling. Short-term, I mentioned funding risk as the last one. So we saw again in this crisis breakdowns in parts of the short-term funding markets. Came under a tremendous amount of stress. And they've been quiet since the spring, and we shut down our facilities and all that. But we don't feel like we can let the moment pass without just saying again that some aspects of the short-term funding markets and more broadly non-bank financial intermediation didn't hold up so well under Great.
Well, maybe the dollar is.
And we need to go back and look at that.
They've made a pivot
regulators
low.
Is going to be to go back.
Finally, so
this will involve all the other.
We'll see.
It does involve all of them as well, and see if we can strengthen those things. So that's a sort of a.
I'm thinking we got more to go though. Maybe we do this for the next 15 minutes, and then that last little bit we sprint.
Mr. Chairman, can you help me understand something about the SEP and your forecasts? The inflation that you're talking about for this year, say, is.
There you go. That is a setup, my friends. Look at that professional camera. He is inserting that background behind him, isn't he? He is not actually in that room.
Unemployment.
That looks like, I could be wrong, but it looks like he is cut out. I don't know, maybe I'm.
From there, or roughly zero.
Well, why are they playing the music? I'm gonna pause. I'm gonna turn it off for you guys for a second. I don't want it to be here on the stream. Somebody started playing the music early. Well, looks like they're going to break the average true range stop once again. That's what you need, a green. I like my background. Got the chalkboard, and we're going to have that LED scroller in at some point here. I don't like anything now. Why did you go short? I just don't understand, Vlad. I short, that's my specialty. I mean, I guess you can take some pretty good shorts on these pullbacks, sure, but wait, what the heck happened there? Did they like cut a part out of the broadcast or something? How's that yield curve control coming, you doomsayers? Yeah. I was getting all excited about Operation Twist, and it sure doesn't look likely right now, does it? Sure doesn't. Yeah. But like I said, this will probably continue through to the end of the week, but will the bond vigilantes come back? They could. Because, what the market has been pricing in for rate increases has been much higher than what the estimates have been. And I don't think that many people actually expected them to change their estimates, The market is saying they're bluffing. But the big thing that I'm seeing here, the Treasury is moving up. That's good. But I think the thing that really matters is that the dollar is just getting creamed. Could switch captions on? That might help you. I don't know if you get live captions, though. No, I don't think you do. If I get, the video gets hit for music violations, I just have to mute that part of the video. It's fine. I hate this manipulated market. That's why I shorted, I guess, even though long 44 would be all good. Yeah. I tell you what, Vlad, going back, this has been the story the whole time I've been watching markets. I remember very clearly 2010. Everybody was like, oh no, quantitative easing, that'll be awful. And all these people going short. And it's not going to work and it's never going to end. And everybody that was listening to those guys, they ain't around anymore, You can't fight it. Yeah. That is okay. Once there was a time. Oh yeah, that's right. I haven't answered that question on that program. I forget what it's called. Okay. News Squawk tweets, Powell says he is not a cat. What? Not worth it for the last 30 minutes. Yeah, probably not. They did take significant profits there, though. Zero Hedge tweets the FOMC packed a huge surprise. Fed now comfortable with slightly negative rates. Let's see here, EVH Lover, you're saying Dixie took a nosedive, but it doesn't appear to me that it's moved lower than 91.3 yet. It's still kind of just consolidating, as is silver and gold. Yeah, 10-year did come back a little bit, but Okay, that's the end. I feel like so sleepy. Oh, no. Oh, I never turned the sound back on for you guys. That's okay. He didn't say anything all that important. GameStop. Well, GameStop was up a little bit, but now it's going down on the day. It looks like it's up 1% from yesterday, but okay. The financial juice is telling me that the early market on close imbalance is 489 million sell side, which is good. You could hear through your mic. Could you really? Can you hear it from my headphones? Well, Bazinga probably knows the imbalance, but I don't think that they ever say it until... Yeah, the financial juice guys, they kind of monitor it, and if it significantly changes, then they tell you. So at the moment, it appears like they're still buying into the close. And then, they're going to sell in the close and close all of their positions. They moved up a little bit there after he was done talking in the Treasury. And the dollar did take another step back down and is sitting right at 91.3 at the moment. With gold and silver pressing the highs. All of the currencies doing well. Oil doing well. It's by all of the things. Is there anything down? What would be down except for the dollar? What about copper? Copper's probably up too. Yep, copper's up too. Well, anyways. Yeah, we should pull the VIX up here. VIX should always be at the top of this list, yeah. There you go. Tesla up 3% and reclaiming the 700 level. Let's go in here and add. Let's see here. Is Volkswagen just VW or is it VWX? No, maybe it's VWX. No. VWAGY? Ha. Okay, so both of them are up, but Volkswagen is up 30%. That's pretty good. Hey, thanks, Win. I'm going to stick around until the close here. Does look like they're going to push. Yeah, I mean, 4,000 is maybe a little too high to meet by the end in 30 minutes. That would be a 30-point move. Probably unlikely, but seems to be doing okay, so. Let's short. I'm still, well, you can do it. You can do it. I'm going to hold this long until the end. Never underestimate M period. I don't know, man. I've never seen that before. Well, maybe we have seen that. Maybe when we were having those gamma melt-ups with the whole SoftBank thing, maybe we did see some moves that maybe could have done that. Ooh, yeah, this is a good point. With the way that the treasuries have been positioned, and I'm sure that there is a massive short squeeze going on, and it's probably something that will take multiple days to come off. Oh, yeah. So while this was all going on, there was a tweet. That the SEC obtains emergency asset freeze charges California trader with posting false stock tweets. The Securities and Exchange Commission today announced fraud charges and an asset freeze and other emergency relief against an Irvine, California-based trader who used social media to spread false information about a defunct company while secretly profiting by selling his own holdings of the company's stock. According to the SEC's complaint, which was filed under seal in federal court in the Central District of California, blah, 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 a defunct Nevada company with publicly traded securities during December 2020, specifically the complaint alleges that Fasari began purchasing over 41 million shares of ARCS stock shortly before tweeting false information about ARCS to his thousands of Twitter followers, including falsely claiming that ARCS was reviving its operations, expanding its business, and being backed by quote-unquote huge investors. The complaint further alleges that between December 9th and December 21st, 2020, Fasari made approximately 120 tweets that referenced ARCS, dozens of which were false and misleading. For instance, he tweeted ARCS 380,000 indoor cultivation, 1 million square feet processing. This CEO has big plans for us. Any ton of news coming and backed by huge investors for its cannabis operation. Oh, it was a cannabis company. Oh, geez. And seeking an injunction, the SEC alleges that Fasari continued to tweet about other stocks as recently as January and February of 2021. The complaint further alleges that over the next several days, ARCS share price skyrocketed, ultimately increasing over 4,000%. The complaint also alleges that Fasari made false statements about his own trading in ARCS. Between December 10th and December 16th, Fasari allegedly sold all his shares in ARCS for profits of over $929,000. While continuing to publish false and misleading information about ARCS and his trading in ARCS. Holy shit. Do you believe this? This guy manipulated the market and made almost $1 million on it? Are you going to be kidding me? Wow. We allege that Fasari profited by using social media to deceive investors, said Melissa R. Hodgman, acting director of the SEC's Division of Enforcement. Melissa, good job. Good job there on this one. This shitbag, and he had thousands of Twitter followers. How does this guy get I want thousands of Twitter followers. Come on. Is that what I need to do? Is I just need to pump people up about their stock? That's how it works, guys. You just gotta cheerlead. Wait, I need to make the channel. What did you guys come up with any good ideas for what we should call our alter ego? For the the parody YouTube channel. Man. And there's more to the story, but that's good. We're good. Yeah, I can't believe he made that much money off of it. Well, it increased the 4,000%. So that means that it could have been, let's see here. That means that's like 40 times your money, right? Yeah. So if he made $9.29, that means that he initially purchased $23,000 worth of the stock. Deep pocket Chad. Diamond Hands Dan. There you go. Ugh. Benzinga says now it is 870 million. Goldman, we were wrong about the Fed. Yesterday, when we looked at Goldman's forecast for monetary policy over the next few years, one thing stood out: the bank's expectation that the median 2023 dot would show one rate hike. A hawkish prediction that spread like wildfire across the markets and prompted speculation among some, such as JP Morgan, that a shorter liftoff telegraphed by the Fed would spark a repricing across the entire rates complex, which then obviously would also impact risk assets. It is also why others, such as Nomura's Charlie McElliott, said that the fate of the 2023 median dot could lead to a surge, either higher or lower in stocks, depending on where the Fed would go ahead with this tighter signaling. Well, we now know that the Fed would have none of this, and while a handful of FOMC members did in fact push higher on their dots, the median remained unchanged. Which brings us to Goldman's just published FOMC postmortem, in which the bank admits that it was wrong about the Fed, an error which it attributed to the Fed's new reaction function, which suggests that several FOMC participants have a higher inflation bar for liftoff than 2.1%. In other words, the economy will be really overheating when the Fed will A, taper, and B, consider hiking rates. Here's what Hatzius just published. I've spoken to this guy before. The FOMC made modest changes to the post-meeting statement and left the funds rate target range unchanged at 0 to 0.25% at the March meeting. The median projected pass for the... Nobody cares about this crap. Kathy Woods is talking oh my on her YouTube channel, ARC. Now she's done. Is she? Oh, we gotta watch this. Okay. YouTube. ARC. She's live, you say? Oh, so already done? Kathy Woods. ARC Invest. Oh, she does have a YouTube channel. But I don't see anything. So I've been here. Let me find this story for you. I thought this was interesting. Maybe you will too. I have to find it. It's probably like 3 pages back. Here we go. From Zero a Hedge by Tyler Durden. The Cult of Kathy Wood. Wood. Oh, is it? It's Wood, right? It's not Woods. It's Wood. Is it? I don't know. Anyways, it has certainly been a wild ride this year so far for ARK fund investors. As the NASDAQ has whipsawed back and forth for the last couple of weeks, holders of ARK ETFs like the ARK Innovation Fund have similarly been taken for a wild ride, witnessing up and down days of near 10% on more than one occasion. ARK ETFs fell as much as 30% between February 12th and March 8th, the Wall Street Journal notes. And we also noted and cheered it on as it fell, didn't we? 24-year-old Jackson Call, who owns $50,000 of the ARK Genomic Revolution ETF, told the Wall Street Journal, it kept dropping, and then it was down 25%. It got painful. He said watching videos of Cathie Wood's constant media tour helped calm his nerves. She helped me not to sell, he said. Hold up here. Wood has been on what seems like a never-ending media tour for the last 12 months, appearing not only on major financial news networks, what seems like weekly, but stopping into grassroots podcasts and conferences to also make appearances. Wood claimed in a video on March 5th, "It's exciting to be alive. We are as excited as ever about everything we're doing." And it seems investors share that optimism. Despite the sell-off in tech this year, ARK investors put more money into the funds than they took out, adding $2 billion in cash to ARK funds over the past month, about $320 million more than JP Morgan took in some of the same types of products. Investors poured more than $36 billion into ARK funds last year after the COVID sell-off. 31-year-old Sean DeCruz, who owns ARK's genomic fund, said it may sell off 50%, but if you look at the companies she owns, some of the larger holdings like Square and Tesla, in 5 years, I'm pretty sure those companies will be around and will be bigger than they are now. If you say so, Mr. Sean. DeCruz reads every tweet, watches every video, and listens to the podcasts put out by Miss Woods and ARK, according to the Journal. This year, he started designing ARK merchandise, which he sells through an online store. My sales are down, of course, he said of his ARK merchant store. Are you kidding me? You can make money selling merchandise for an ETF. What? I'm really sweaty. You can tell it's been a stressful day. Okay. 55-year-old Jeff Sanders said he also wasn't worried about this year's sell-off. She still has conviction. It makes me feel better about it. I got a screenshot of our portfolio and texted it to my wife. I said, this is ugly, but it's going to come back. Yep. That's exactly what you do when your ETF is down and you show your wife, but don't worry, it'll be back, honey. Financial advisor Larry Carroll has been putting his clients into ARK's innovation ETF since 2018. They have cumulatively bought about $300,000 in shares. He believes in Wood so much that he organized a virtual meeting between her and his clients. There's nothing wishy-washy about her opinions. Those come through loud and clear and are part of her success, Carroll said. As financial advisor, Carroll keeps putting his clients into ARK funds. The most prescient quote of the report comes from the 27-year-old Brock Driver, a production manager at a machining company. Driver said he sold out of the innovation fund during this year's drop. I'm afraid at this moment we could be getting ready to face something I don't think Cathie can control. Production manager at a machining company. Okay. She's crazy. I've seen a couple of things from her talking. She does seem crazy to me. But here's the thing is you just tell people what they want to hear and be eternally optimistic and they just love you. It's scary, right? And here, now we're finding out like you can run a whole ETF. I don't think that we all realized when we heard about how big the ARK ETF was and everything like that. Like she has a huge social media presence. She has a YouTube channel. She's talking all the time. She's doing all these interviews. Like she plays the PR game. And what are we finding in the stock market? That it's about marketing like everything else, isn't it? And here, now we're finding out that if you have the right marketing, and you lie to other people about it, that you can make 40 times your money. Okay, so there was the market on close report. Interesting. Muy interesante. I think I'm gonna get out right there. Thank you. Oh, I had slippage on my execution. Should have put it as a limit order. Oh, and what about over here? We'll get out of this too. Should have gotten out of this a long time ago, but that's okay. In fact, I will just hit into it because I don't care. Anyways, I hope you enjoyed that little thing about, oh yes, the Fed down. Now we get the quad witching. Ooh, this could get crazy, 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 couldn't it? Well, let's check in on the stocks here. Well, silver pulling back a little bit. AG down at 17.43. They were up all the way up at 70 cents at one point. ARK up 1%. Tesla up 2.75%. Volkswagen 28.25%. GameStop losing its gain and down 0.25%. RKT down 2%. And Apple down spot 6. But then we got Amazon's doing pretty good today, up 1.83%. AMC also up today. That's interesting. Ooh, and then the banks are Goldman up spot 76%. So yeah, and Zero Hedge notes that the gamma gravity is at 4,000. I wouldn't be surprised if we wake up tomorrow and it is already at 4,000. Like, I sold it there. I don't want to get out here before ahead of the open, or the close. But I bet you that this is one where you hold it overnight and we're going to wake up is going to be 4,000. SPUs in euros now lower than just after the news. Oh, really? Very interesting. So the most of that rise was just the dollar being devalued. They sure want to take profit. Yeah, they do. They traded this for sure. For sure they traded this. Got anything else for us before we close? I'm going to have fun on TikTok tonight. Hopefully. You know what? I never ate lunch. Should have held the short of confidence. I was just broader chow. Here's the issue with this sort of a thing is that with a market this wild, you can make money on both sides, right? If you manage it correctly. It was like I was saying, when in a bull market, it seems like everybody's making money. In a bear market, even the best just only break even. And it seems to me that when you're the wrong way, that you should just try and break even. I tell you what, though, look at that. On all of that sim trading with the, having fun, I had fun. $2,000. Almost $2,000. I should have taken one more tick. Had my risks correctly, 80 unrealized, then 8 break even. Yeah, I like, again, it's, I just look at the liquidity. I don't know. Apparently it's all, well, it is. I mean, so think about it. Like, how do I put this? So if we're market making and it's moving up and we want to go short, well, let's do it the other way. Let's say that we're buying. So it's easier to talk about buying. That just makes more sense in people's minds, okay? So I'm going to take orders here, here, here. You know, like, let's say that I have one order at every step of the way, right? And I have a one order at every step of the way this direction too, right? Okay. So that's the way that, like, a real market maker does it, is, or like somebody that was obligated to make a market. You know, like when you hear Gary Norton talk about market making, he had to give a bid and an ask. And the way that he balanced his book was how many he would put on the bid and how many he would put on the ask. So if he expected it to go down, he wouldn't offer as many contracts up, or sorry, he wouldn't bid as many contracts, right? Because you want to limit the amount of inventory that you take. And then you want to be immediately putting your offers out there so that anytime that somebody does hit into you, you're taking it off, right? And you adjust your price based on how much flow is coming in so that you can do that, so that you can actually get out. And in the end, you should be able to be break even or make money off of the spread. So there are models that prove this. There are models that they use for this that allow them to run this kind of strategy to say, well, if we base our bid, our best bid and best offer based on how many orders are coming in compared to the average, the standard deviation in volume and the standard deviation in price, then we should be able to make the spread on average, right? But here's the advantage that you have. You can do all of that. But you can choose which direction you want to take it. You can say, well, I think that this is bullish, so I'm only going to take them on the buy side, right? So how do you do that? Well, you just have to look at what the standard deviation in price and the standard deviation in volume is to determine what you should set your best bid and ask for. And to know when that is changing, how the other market makers are going to react to it and step in. Yeah. So you could, you wouldn't even necessarily have to martingale it. But you are right in that the place where we run into an issue is to say you only want to take one contract. Is what if it's like a trend day, you know, and you're wrong? Then obviously you have some issues because you don't really get the luxury of deciding. Well, sorry, let me back up. If you're market making, you don't have to sit down and worry about how far it's going to go, right? Because you'll make the spread on average. Whereas as the retail trader, you're trading small lots, you do. I got taught there are no market makers in futures, just liquidity providers. Well, so my understanding is that, so like it used to be that you would pay a company to be a market maker in a certain market to make sure that people are able to execute on that instrument. But futures are so liquid and there's so much interest in that there are no like designated market makers of that sort anymore. There's just tons of robots. But these robots all use the same model. You know, and it just kind of depends. Does their model take into effect the square root of impact, for instance, and these sorts of things? Anyways, it gets complicated. I told you too much. Stay profitable, friends. It's over. Yeah. Good day. Okay. Well, it could be a little bit better, but it's cool. I want to see my silver go up. Anyways, I'll catch you guys tomorrow. It'll be interesting. In the meantime, stay profitable.